Hello traders. Today is the 23rd of September 2013 and the time in London is 4 minutes past 2 p.m. Right here, 4 minutes past 2 p.m. In New York, 4 minutes past 9 a.m. Happy trading to you all. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend, wie geht's? For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-macd.com. For all trades, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is Day Trading Like Wall Street Warriors. Day Trading Like Wall Street Warriors, Part 1. Let's get started. Stay with us, okay? Going to draw some line here. Pay attention carefully to what we are doing here. This is for educational purposes only. I'm highlighting the high, the low, and the median line of this tall candle. See the tall candle? I'm highlighting the high of the body. You see, there is a tail for this candle, and the body, okay, is this part of the candle. You see the wick of this tall candle, but I'm concentrating on the body of the candle, the high, the low, and the median line. Roughly, okay, this is not exact size, roughly somewhere here. The median line is somewhere here. The line that I drawn here, I highlight in zone. These are not a thin line, these are zones, all right? So that's what I'm saying to you. We don't want to be exact, okay, all right? Zones. I'm going to color the high into blue. If you are a day trader, I invite you to follow me and to pay attention, okay, to what I'm trying to do here. I want to show you something very important, day trading like Wall Street warriors. The Wall Street warriors, day traders, are creaming the market every day. It doesn't matter whether there is volatility or not. They are making money in this crazy market. Why? Because the reason why they make money, they have observed the market. They notice something that the market is doing all the time. And these phenomenon are repeating themselves every day. So all they are doing, they're like hunters. They are just waiting for their setup. All right. So when they see the setup, they know what is likely to take place. They have seen it many times, and they just wait to take advantage of it. This is about Wall Street, warriors, day traders. This is what they are doing. It's very simple. It's also powerful. I'm going to highlight the median line into pink to please the beautiful ladies. All right, let's move on. All right, the way I'm talking like this is just to make traders laugh a bit. I'm very serious about this, but just to make traders relax. So we have the high, which is the blue, the median line, the pink, and the green one, because we see a tall candle. Now, when we want to day trade, we want to work with market principle. A tall candle or a high volatility candle is a distortion to a certain degree, except in the third area where we know that it's a market stable data. When the market is distorted, very often, okay, more than 80% of the time, the market will try to rectify itself. What do I mean by that? The price will try to cancel, or the price will try to erase, or the market will try to erase, or the market participant will try to bring the price to its a fair value. This is what we call, okay, market corrections, all right? So after a distortion, if it's a true distortion, we will expect a correction. This is just something, ladies and gentlemen, that is taking place all the time. Though I'm using the Euro USD here, which is a currency, this strategy is valid for stock, for commodity, for any financial instrument, once we see a tall candle. The Wall Street warriors, okay, are very smart day traders, all right? So they do not come into the market anyhow. They pay attention to the economy news. Some of them do not use the fundamental to make their decision. They use the technical setup to make the decision. But, ladies and gentlemen, but they pay attention to the economy news. This week, as I'm speaking to you now, there was an election in Germany, okay, and Merkel has won the election again, but she is forced to form a coalition government. As we have in London, here we have a coalition government between a conservative, okay, and a liberal. So in Germany, they used to have a coalition government, but this coalition government will have some effects on the Euro USD or the Eurozone, because Germany is the leading, okay, Eurozone player, all right? You may say to me, George, I trade stock, I trade commodity, I trade indices. I don't want to know anything about currency. But what is happening in the political arena will affect the stock market, will affect the currency. And what is affecting currency will affect stocks, because people are using money, real money, to buy stock, to buy commodity. And if a currency is devalued, this will affect how people, okay, are participating in a market. In fact, I think it's very important for forex traders to understand how the forex, it's important for stock traders to understand how forex function. Moving on very fast, because we don't want a video to be too long. We have our high, our low, high, medium line, and low. What is my strategy? My strategy first is to check the clock, because I'm a day trader. In exactly 20 minutes time, New York will be open. So we are still in a gap period. I need to know what is taking place, the time of the day that I want to come into the market. So I know that we are in a gap period. I will not place a trade until New York is open. The Wall Street warriors respect the opening bell. Alright? So now we know, pay attention carefully. If the price stays above the high of the tall candle, is very, very bullish. So we can say here on YouTube, okay, that this zone here is very, very bullish, provided, repeat, provided that the price is displaying higher lows and higher high. You see now? So what I'm going to do now, pay attention carefully, because I know day trading is not easy. So some day traders, okay, want to know. So far, as we can see, the price above the high of the tall candle, we have seen the highest high is somewhere here. You see here? So I want to know the highest high. So if I want to buy, the price must go back above the previous highest high. This is the definition of, okay, an uptrend. But so if I decided to buy below the highest high, I need to manage the trade carefully, because as long as the price couldn't go below, the price couldn't go back above the previous highest high, it's not 100% bullish. I'm aware of it, and I know that. So for instance, if I'm buying here, it is going up, but it failed. I know that it's not working perfectly. Some traders will wait, goes above, retest, and turn around. All right. So we know that this bull zone is very, very bullish, but we want to watch the highest high above the high of the tall candle, or at least by giving us higher lows, higher highs above the high of the tall candle. This is happening all the time. Because there was a distortion to a certain degree, we know that this zone above the highest high, the high of the tall candle, is bullish. There are levels that the price will try to go through. The first level is the high of the tall candle. See here, that's where we are now. Touch it here, you retest it here, you come back to it. It's not by mistake though. The Wall Street warrior knows that. He touches it again here, now it's going back below it. If the bearish momentum continues, we should see lower lows, lower high. What do I need to do? I'm on the hourly chart. I can just draw, join some point here, which I'm going to color now in my one of my favorite color, turquoise. See this point, and this point allow me to draw my turquoise bearish trend line. Okay. So also, if the price is going to go down to reach the pink line, it must be in a declining channel. So this point, pay attention, this point and this point allow me to draw my bearish trend line. Now I'm choosing only one point here to make it, oh, I'm moving my line, my apology to traders. Okay, it's not too bad. Okay, so I just need one point below here to make it a parallel. Okay, let me draw my parallel line to the top one, to the turquoise. I'm going to explain myself to you. All right, so I'm going to bring my high again here. So what I've done, I'm going to put another turquoise line here. By the way, turquoise is a French word. Okay, so now here we are, you see. So this point, 3 points we need to draw a channel. This point and this point, joining the low and the high and the lower high, we have our first turquoise line. All I did now is to choose one point here and draw a line that is parallel to the first turquoise line. Now I have my channel ready. Good. So if I want to sell, I will prefer the price is bumping like a crab in the declining channel. I will prefer it boom, 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 down and then up. Retest, and then we take it slowly but gradually like a crab to the pink line, which is our next target level. All right. Now, sometimes the price will find support above the tall candle. You will see that very often during earning news, a company come out and beat the analyst estimate. Boom. Everybody, surprise. Everybody was expecting that they will miss the analyst forecast, but they have, exceeded the analyst forecast. It's a big surprise. It's a very good news. We see a tall candle. There is a high chance that we may see the price continue to move to the outside for a while. We may not see a cancellation of the tall candle because this is fundamentally justified that the equilibrium price level has changed. So there is a high chance that in a normal market environment, that after a stock has exceeded the analyst forecast, after a tall candle, we are likely to see the price continue to move to the outside. Fundamentally justified. In this case, if it is the tall candle is due to a lot of speculation, all right, repeat, speculation. So some major economies are due, some speculators are betting, all right, that this event will take place. An event is taking place. These speculators do not want to stay too long in the market. They want a quick profit. Once they see their big profit, they will grab it. And if it happens to be a lot of profit, do not expect them to wait in the market and give back the profit. They will take it. That's why very often the tall candle will be canceled. All right? Sometimes maybe it's only one market participant that has pushed the price so far, which means a dominant market participant has created the distortion. After that, they are not going to stay in the market too long unless they know something that other market participants are not aware of, which is fundamentally justified, and they will continue to buy. But if they have no intention to remain in the market too long, they will grab their profit, and you will see slowly but gradually the price will cancel the distortion. You may say to me, George, I had enough, and I want to go. Let me show you something before you switch off, okay? So you trade in commodity, you trade in any financial instrument, you will see that. I want to change it. We are watching the Euro USD. As we are seeing now the price coming near the base of this one here. And also in exactly 13 minutes, New York will be open. And in my view, the Euro should cancel this a tall candle here. Sometimes it takes too long. But slowly but gradually, you may see that. Sometimes it may not, unless we see we have a fundamental reason, why the stock should continue to move to the upside. There was one scenario last time. This is it. We are again on the hourly chart, and here it is, ladies and gentlemen. This is the dollar yen, which we told traders is very, very bullish, but we are expecting the second Elliott wave to be completed. It's taking too long, but That's what I say to traders. So this was our tall candle on the hourly chart for this USD yen. It happened before. As I said to you, to achieve consistent winning trade, one must dictate a pattern or a situation that is arising consistently, and one must understand it and take advantage of it each time. That's how the Wall Street warriors, day traders, are trading. Okay, so now you see the tall candle, the high, the low, and the median line of the body of the tall candle. So the price you see here, we highlight it. The first target, as you can see on this hourly chart, the price went back, boom, 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 touch it, pull back, and then when above it, retest it. Can you see it? Am I talking to myself? Retest it here, and then boom, it went above it. The distortion here for the USD yen, which is a dollar yen, has been cancelled quickly after this economy news was released. This is the day where the Fed was speaking, saying that the quantitative easing will continue. So the market was expecting the Fed to stop pumping money into the market, and the Fed said no, we cannot afford to do that now because of the fiscal discussion that will take place between the Democrats and the Republicans in the United States. All right, so they were careful not to stop the quantitative easing in case the fiscal discussion create more messy situation. All right, so we see here the distortion has taken place. Price went to the first target, which is here. All right, the median line, and then cancel it completely here, and then it went above it. You see now what's happening today? Today, as we can see, after going above the low of the distortion candle, in this case because it's a bearish candle, we are coming near to retest that level here. We need to watch it carefully, all right? We are retesting this zone. Watch this zone carefully, all right? So this is a phenomenon that is happening all the time. I want to show you another one, okay? So in case you are getting a bit, all right, excited about it, see it. This is another tall candle. So you want to achieve consistent winning trend, you want to know your setup. You want to understand something, you want to observe something that is taking place, like the Wall Street warriors know their setups and they trade their setup day in, day out. They come in, they're looking for it, they prepare themselves for it. In fact, they will do their homework, they will pay attention to the economy news. Some of them are pure technical traders, but they know their setup and they are waiting for it. As they see it, everything aligned carefully, they know how to take it, how to enter it. When the pattern is distorted, they just take it day in, day out, and they are taking advantage of it. Without a valid setup, there is no winning trade. When I start trading first, let me tell you the story. If you think you are losing, you are not losing. I was losing, like the best losers, all right? What was my problem was that I did not have a setup. One thing you will notice if you are a new trader or you are struggling, you will use one method today, which means you use maybe RSI today, tomorrow you use MACD, another day you use stochastic, another day you use channel, and you are busy on the internet looking. There is a reason for that. Traders are looking for something that will work for them. It's nothing wrong with it to look for it. But at one stage, when a trader is maturing, or traders that are paying attention to their mistakes, are improving their ability to trade, they will slowly but gradually develop their own trading methods because they have learned a lot of things, YouTube, on the internet, talking to traders, asking questions, and trying to improve. But the key point that I want to stress on is to use the 5% money management. Very important, okay? So we see again the high, the low. We see this is a low, the high. Attention please, ladies and gentlemen, this is the high, by policy trader, the high, the median line, and the low, all right? The high, the median line, and the low, all right? If we color it again in pink here, the median line, all right? So everything aligned for us. So the high, the median line, and the low, all right? So now we see, as he did this here, we are watching it. We say, okay, let's see what's going to happen. What he did, it went below the low. So we will say it's bearish, but we will not just sell. We are the hourly chart. We say retest it for us, please. Confirm that this level is a resistance level. So we see it coming like this, we're watching it. We will switch to another time frame, lower time frame. Again, we use the channel. If it's going to go down from there, you'll be in a declining channel from a lower time frame. And it didn't. And it went up, okay? Next target, the pink line. Second target, the high. You see? Now it's sitting on it here. This is a USD card. Alright? Tall candle. So from here to here, as you can see, here, you see, from here to here, as we want the price to retest this level, the price will be in a rising channel and will be displaying high lows and high. Okay, let's go to the, okay, what I will do now, before I switch my time frame, I'm going to draw a common sense channel here along this portion, just like this. Allow me to do that if you accept. You see it came out of here, but I will go, you see. Alright, pay attention to my channel that I'm drawing on the hourly chart, and then I'm going to switch my time frame roughly. Put your comment below if you disagree with me. So, okay, here, so roughly, okay? Alright, be tolerant, okay? I'm just drawing along, you see, very close along, okay? On the hourly chart, okay? Do not forget that I will try to extend it so we can see clearly when I change my time frame. Okay, so now I'm going to, let's see whether we can see on the 5-minute chart. I don't think so, because I don't have enough data for 5. Let's go to the 15-minute chart. Here it is, you see, it was in a rising channel, okay, on the 15-minute chart. It will be better if we go, for instance, on the 3-minute, 5-minute, lower time frame. You will see clearly that the price was in a rising channel here. Alright, so the key point I want you to remember, as we draw the high, the low, and the high, the median line, and the low of the tall candle, we can just switch to the lower time frame, alright, and monitor what the price will do. Very often, if it's going to cancel it, which means from here to here, we will see it in a rising channel. I'm going back again to the Euro USD. Okay, remember that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSCW 24 traders. Again, here we are again, the same scenario for the Euro USD. To achieve consistent winning trade, we must have a setup. We see the setup, we want to validate the setup. More importantly, we want to understand the setup. Speculators will take profit, all right? A tall candle can be created by a group of speculators coming to the market, the mass chasing, okay, easy money, pushing the price up. Or a single market, a major market participant may control the price from A to B. He or she has to close the trade at one point. It's happening all the time, and you can just wait for it. The fundamental reasons were factors that created the tall candle, which I explained to you. Economy news, a company beats the analyst forecast, very often we are likely to see a continuation. Excellent fundamental reason, we are likely to see a continuation. Sometimes, traders get into trouble. Alright, as a trader asked me recently a question about entry point. As I explained to traders, the most important thing in day trading is the entry point. How do you enter the trade? And it's very important. And how you manage the trade also is important. As a Wall Street warrior, you want to know your setup. You want to understand your setup also. You want to know how the setup will fail, how the setup is formed, okay? The variation of the setup I explained to you for the tall candle. And this setup, I trade it all the time. And I see it all the time. Economy news come. Don't trade economy news. That's why I say to today. Go to Forex Factory. Go to Google Finance. Go to Yahoo Finance. Check Bloomberg. Excellent. Free stuff Bloomberg. All right. Yahoo Finance. Google free. Okay. And Forex Factory. Excellent job. If you trade Forex, just bookmark that webpage. All right. And now you know the news. It come out. Boom. Okay. Don't force it. Just let it roll. You see where you go tall at this. Don't start selling. Just let it roll it. Sometimes you take days. You see on the 18th, 19th, okay, 20th. Today is what, 23rd. It took some days. Believe me, traders are selling long time here. All right, but there was some economic, some political news this weekend. That's why the euro took longer. Okay, And we have the German election. Okay, now a lot of money came out of the Eurozone. They were afraid that Merkel will lose the election. Now there is this discussion about uncertainty about the coalition government, how this will affect the Eurozone. So this discussion is still going on. The time now, as I'm speaking to you, in 2 minutes time, or 1 minute, in fact, New York will be open. All right. So you see now, day trading like a Wall Street warrior. It's about understanding, a pattern, a setup, a trading phenomenon, and taking advantage of it day in, day out. Do not forget the gap period. Respect the opening bell. Prepare yourself before you enter the market. Use the 5% money management rules. When we see the setup, we want to validate the setup. Okay, validate the setup. Then we go to the entry time frame. Sometimes there are many ways trader can enter the trade. When you are using TSCW24, we have one way we enter the trade, but there are many ways traders can enter the trade. A common sense line is kaput. Some traders will sell or buy. All right. Here you can see. If I put MACD on this chart, I want to explain something to traders. Okay, let me put MACD on this chart now, and because traders love indicators. And I want to explain something very important to traders, momentum, all right? The momentum is representing the sentiment and also the speed, all right? So you see here, boom, this is the standard MACD 1229. So the speed, so you are driving first gear, third, fourth, fifth, all right? You don't want to go over the speed restriction, all right? So you're going fast like a Ferrari or Lamborghini, all right? You see, boom, that is, you start dropping it down. 4, 3, 1. Now, from the point where we start the speed, now we come back to where we start everything. The momentum is weakening. It doesn't mean that the price will come down. The MACD has returned to its equilibrium level, but the price has its own equilibrium price level. So if you are trading MACD, you may get into trouble. You must keep eyes on the price safe. What is happening now for the Euro USD? The price went up and now it's consolidating. Okay, you can see in this session it's consolidating. So if you are bullish, you wait for it to come on top. If you buy below the high, which I show you the highest high, you need to watch it carefully until it goes above it. It's still not 100% bullish. Now we are on the hourly chart. We will not enter the trade on the hourly chart. We will switch to the lower time frame, to manage the trade. The momentum also, because you see the momentum here, speculators, a group of traders, a trading activity has taken place, creating this momentum. That momentum has diminished completely and returned to this point. What is taking place? Are they pausing? Yes, they were pausing because of the election in Germany. But what is the next step? The next step, the price will tell us. I'm going to go now to my favorite time frame, the 3-minute time frame, and we can take it from there slowly but gradually. Okay, I will prefer it to cancel the distortion, and so the markets can get back to normal. Why the market is so concerned about the correction? You see the tall candle or the gap. You see sometimes the price will gap up. Professionals do not like very much that because it distorts your, especially technical traders do not like that. You go to the daily chart, you see this big gap or this tall candle, and it's like a hole, all right? And the market usually, they prefer it to come back to the starting point. We know the news now, we know the data now. If it's truly bullish, if it returns back to the base, we will take it back up again. That's what's happening. But if the news was not fundamentally solid, any rush up, we bring it back here. We may go like a crab in horizontal, only to bring it back down completely. Sometimes what is taking place, looking at the long-term investment point of view, for instance, if we want to sell, the hedge fund want to sell Euro USD, for just one economy news in when they propel the Euro back to the upside, they will prefer to bring it back again slowly to the downside. The long-term or the higher time frame will command the lower time frame, or the long-term fundamental will control the short-term fundamentals. All right? On the 3-minute chart, ladies and gentlemen, let's start drawing lines now. New York is now open. New York will control the Euro USD. Euro USD will tend to move in the same direction like the Dow Jones and the S&P 500, and we must, okay, follow the price. I'm going to remove all my line on the 3-minute chart, and I'm going to start drawing lines, channels on my 3-minute chart. So far, ladies and gentlemen, they're trading like Wall Street Warrior. We want to use setup. You are using TSCW24 or SY008. The setup first. Understand the setup, work on it, own it, and wait for it. Alright? For know when the economy news are due. On the 3-minute chart so far, we have, okay, horizontal channel. So you may say to me, George, I think this thing is going to go down, and I want to sell. I don't want to miss the boat. Okay, the price now 135.02. Okay, if you decide to sell it like this, where do you need to place your stop loss? The highest high here. So you will see it's at 135.01. Your stop loss is at 135.48. Are you willing to take that risk of 48 pips? If the answer is no, you look for another position. So you may say, okay, I'll place it here, this one here. You know that it's a bit tricky, okay? So you will put it at 135.28. Patient traders will say, okay, let's allow you to come out of this horizontal channel and start giving us drawing, okay, a declining channel. And from there, they will wait patiently, okay, for it to come back and retest the new declining channel at the top here, and then we give it a chance and let it roll. In every trade, ladies and gentlemen, if you are day trading, there is always a risk. The price can change direction at any time. That's why we use the 5% money management rules, and we control the trade. If the signal fails, we don't sit and pray. Though we can pray. All right, that's nothing wrong to pray. But we can just, okay, you don't like it, come out. All right, you like it, stay in. Or sometimes, as I showed you in one of the video last time, you may decide to leave it as it is. Or sometimes we move stop loss. Professionals will tell you they don't move stop loss. Every trader at one point will move stop loss. Why is it risky to move stop loss? Because you may end up losing more. But sometimes trader can carefully move their stop loss and still remain in the trade and be rewarded nicely. Day trading, ladies and gentlemen, is like football. You must learn to play the football and understand that you can be the best player, but sometimes, okay, a team can lose even though they play very well. But at the end of the day, all right, at the end of the championship, you want to be on the winning side or be on the top 5. This is about, okay, day trading like a Wall Street warrior, which means you do not want to lose for a long time. But at one point, you want to start adding to your profit. We wish you the very best in your trading. And until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.